Welcome and thank you for joining us today. I'm Dagwan Che, a general partner at Bond, a global tech investment firm. And joining me today, I've invited two exceptional entrepreneurs, Pier Paolo Barbieri, founder and CEO of uala, a mobile consumer finance platform in Latin America, and Sebastian Kanovich, founder and CEO of dLocal, a global payments platform focused on emerging markets. And we've assembled this panel to discuss the fragmentation that exists in the global payments market. And as digital companies pursue international growth and expansion, they have to navigate a variety of complex local payment ecosystems, many of which lack the infrastructure of typical credit and debit card rails that exist in developed markets. And this situation has given rise to a new wave of fintech companies specializing in alternative payment methods, from mobile wallets to offline to online kiosks to bank transfers, QR codes, and many more. And today we'll discuss how emerging fintech companies are providing unique solutions to enable the future of global transactions. So to kick off the discussion, we'll have each panelist quickly introduce themselves. So starting with Pier Paolo, could you share a quick overview of yourself and uala?
Thank you, Darwin. Pleasure to be here. Thank you so much for having me, and a pleasure to be here with Sebastian. I'm Pier Paolo Barbieri. I founded uala in 2016. We launched to the market in Argentina in 2017. We are a mobile wallet connected to a global MasterCard on which we have three pillars of services. We have the payments pillar that is centered around the MasterCard, but not just the MasterCard, with transport card, bill payment, and payment links. Second, we have the lending side, where we have personal loans as well as installments. And thirdly, we have the savings side, where we have a money market savings account. We have around 8% of the country in Argentina and almost 19% of 18 to 25-year-olds. And 3 weeks ago, we launched in Mexico, the most unbanked of the large markets in Latin America. So we're now international. And we're expanding. We add around 0.25% of Argentina every month to our platform.
Fantastic. And Sebastian, could you briefly introduce yourself and dLocal?
Sure. I'm Sebastian Kanovich. I'm Uruguayan. We started dLocal 5 years ago now. At dLocal, we do payments markets, which essentially means that we help international companies, so the likes of Citrix, Spotify, Uber, Amazon, to pay and collect payments across multiple emerging markets. So that number stands at 24. We started with one. We continue to expand. We have a plan to be in 35 markets in the next 18 months. And fundamentally, what we do is we help these companies make sure that they are properly local and being able to offer the right payment mix in each one of the markets where we operate. And that's where we are. And it's great, Pierre. It's great to be here. And congrats on Mexico. It's amazing.
Perfect. Thank you both for joining us. Let's dive in. So first question, the emergence of these digital disruptors across so many categories, retail, transportation, entertainment, has really accelerated the need for payments to evolve in the digital first world. And we have the benefit here of having two perspectives on this panel, both the B2B side and the consumer side. So starting with Sebastian on the B2B side, what are some of the biggest challenges that companies and enterprises today face in allowing consumers frictionless ways to pay for their services?
Sure. So our view is that there are two things happening at the same time. On the one side, merchants are being required to be more and more local. So customers do have very local expectations. So they want to feel that their merchant is serving them in their own language, but with their own payment method. And at the same time, the payments world is becoming more fragmented. So on the one side, merchants are having more requirements to be local, but at the same time, new players are coming to exist in each one of the markets where we operate. And it's only getting tougher to be able to offer that. So if the other thing that has obviously happened is that before companies thought of the US and Europe as their only markets, probably China, some of them would include. But now markets like India, markets like Nigeria, Argentina, Mexico, Brazil are the places where growth is going to come from. So if big enterprises really want to have a chance in these markets, they need to do the effort to speak in the language they want and make sure they offer the right payment mix. For us at dLocal, what we do, it's a pure infrastructure play. We're a pure B2B play where for us, whatever preferred payment method there is, we are very much agnostic. We just want to make sure that we are becoming the revenue enabler and making sure that our customers are being able to collect and disperse funds to customers wherever they are.
Yeah, and within those markets that you're servicing, are there any that you feel customers are pulling you towards more frequently in terms of new geographic coverage, or is it pretty widely distributed around the world?
So we've seen crazy growth from Africa and Asia in the last 2 years. The reality is LATAM, it's a more mature market for us. But fundamentally, the key markets are those that are big in population and big with people going online. So India, it's a key driver of growth for us. Nigeria has become a great surprise where we just didn't see it coming, and Nigeria is becoming more and more of a priority for our merchants. And obviously, Brazil and Mexico have always been the two places where particularly US companies thought of once they decided to go international. The beauty here is that before, for an American company, international meant Mexico, then at some point they added Brazil, and now they're generally thinking of, okay, what's a wider emerging market scope and how we make sure we are relevant everywhere.
Yeah. And speaking of having a wider scope, even outside of Brazil and Mexico, Pier Paolo, you guys started in Argentina. What are the biggest challenges that consumers today face in some of these developing markets in transacting in the digital world?
It's a very simple issue in Latin America. We have over 50% of all adults who have never had a payment mechanism to enable them to do a digital transaction. So they don't have a card. Therefore, they don't have a credit history. Therefore, they don't have a formal savings tool either. So what we provide at uala is a universal account. And it starts with that, and then you layer on top a global MasterCard and a variety of digital services that you build on top of that. And then you can move on to the pillars of credit and savings as you see fit. So what happens when you need more money than you have, and what happens when you have more money than you need? And so what we provide is a holistic marketplace solution where we are actually enabling traditional players to offer services to a wider, ever wider group of people that are now on the uala platform. And so if you think about 2017, when we launched, and today, you see more and more of your wallet becoming digital. But if you're doomed to cash, you cannot transact on Spotify, on Netflix, on PlayStation, on Mercado Libre, on eBay, on PayPal. So you need that payment mechanism. We are therefore an enabler for the consumers of that digital solution and digital payments infrastructure. And on top of that, we keep layering services, and we've seen incredible organic growth, even to this day, having over 8% of the country in Argentina on uala in 3 years and 1 month. We still see that 30 to 40% of our growth is still organic, because people need that way to get into the modern world, and companies need to access those consumers. So, from day one, we had support of the likes of Netflix loving uala and giving us the ability to use their brands for free, because we are the way they get to new customers.
Yeah, and as we move away from cash, especially with accelerants like COVID, there have been a number of these non-cash payment method options that are gaining steam depending on the market. So there's physical cards, virtual cards, QR codes, mobile wallets. And do any of these, Pier Paolo, for you stand out as particularly promising or gaining traction relative to the others, or do you see them as pretty evenly distributed?
Yeah, that's a fantastic question. The truth is that at the core of it, 93% of all transactions in Mexico are cash, and in Argentina, it's 80%. And so our main enemy is still cash. So we can have the technological discussion, but in the region, the enemy is cash. So we need to provide a universal account. Then we can have the debate, once you have a universal account, about QR, contactless, physical card, virtual card, P2P. There's new protocols for transfers in most of these markets, which we fully support. Then we can have that conversation. But the key is to provide a free, open, and inclusive account from which to run your online payments life. And so we do that. And then we offer P2P, we offer bank transfers, we offer a global MasterCard, and we offer QR for friends and family. And so we then let the user choose. However, as Sebastian said, these are wealthier markets. And so the upper crusts of society are already used to and very penetrated by card networks. So unlike in China, where the Visa and MasterCard never really got in these markets, everybody in the society in Mexico and Argentina and elsewhere, Colombia, Peru, Chile, wherever, they know how cards work. They've always seen cards around. They haven't had them in many cases, but they were there. And so we think that contactless is a superior, more secure, and more attractive option than QR, because it allows you to do all the online payments. So if I want to go to wish.com, or if I want to go and buy something on amazon.com, they're not going to take my QR, but they will take my global MasterCard. And if it's contactless, the person-to-person and the transport use case, which we have in Argentina integrated into the infrastructure already, and we're looking into it for other markets, those and contactless technology are easier, faster, and more secure.
Yeah.
But also more expensive, right? So that's the other, that's one of the things that is likely to change in the future.
Yep. And Sebastian, on the same topic, you have a view from the business side as well, working with so many different merchants. How do you view these fragmented payment systems either coexisting, converging, or competing over time? And it sounds like Pierpaolo is bullish on contactless for the reasons that he mentioned in terms of the benefits. Do you see the pull from merchants towards that as well? And what's your take on the market currently?
Sure. So first of all, I do agree that cash is still king, and I do agree that none of us are fan of cash. It's clear. It's clear that whatever digital method the user wants to use, it's better and it has a better experience at cash. Having said that, we don't believe we should be the ones educating the market. We love that there's Pierpaolo's here giving that fight. Our approach, it's a little bit more agnostic in the sense that there's going to take some time, and we need to make sure that these users manage to transact online for the first time, even if they have cash. So to give you a sense, Spotify now did a strong effort to be able to accept cash. Is it something they love? Probably not. They would also much rather have a card on file. But in the meantime, there's a big set of population, and these companies are trying to become utilities. So they generally want to be able to be everywhere. So you can just not leave 80, 70, 60% of the market out of there. If you ask me in the long run, I do believe we're going to move to more digital type of payment methods. Things like UPI, things like Pix in Brazil, that's the government's moving on the right direction. We've seen crazy adoption for UPI in India, and we do see the same. The question is, what do we do in the meantime? And I think there's many things to happen. On the one side, we need more companies going after these users and making sure they have an instrument. On the other side, companies like us that build infrastructure, we need to make sure we're building those bridges to make sure that no one is left behind from the internet economy, which at the end of the day is what's happening. If you just don't have a way of paying, no matter how much you are on the internet, you are left outside. You're a second-class citizen. You just don't have a right to buy online. So we do believe that the trends for sure are in the right direction, but trends take time, and we need to help them accelerate.
And on that note, in terms of this idea that it'll take time, and you mentioned a few initiatives that the governments are doing from UPI in India to accelerate this pace. Sebastian, are you seeing that consistently globally in terms of regulation opening up access to these tools via maybe COVID has been an accelerant, or do you feel like it still needs to push forward? What are you seeing so far in terms of the role of regulation in the sector?
I think there are two types of governments, or three types of governments. There are those who are absolutely against any innovation, and I don't think there's much discussion to be had there. There are those who are pushing with regulation the ecosystem. That's the case with UPI and Pix, where the central bank comes and says, okay, we need a framework like this, and we're going to push it. And somewhere in the middle, where most of markets are markets that are giving payments companies frameworks or fintech companies frameworks to work, and they are saying, okay, you bring the innovation, we are giving you the rest. I do believe that's healthy. Obviously, we love to have a government-sponsored type of innovation in the sense of what UPI or what Pix does. But I think more realistically, we are going to end up somewhere in the middle with governments already saying, look, there's a clear new player here. These are not traditional banks. These are companies that are genuinely bringing value to the ecosystem. Let's make sure we regulate them the right way and give them leeway to bring innovation by themselves. So that's our expectation, and that's what we bank on.
Yeah. And Pierpaolo, consumer finance is a heavily regulated space, especially as you get into things related to capital markets and access to lending. What is your view on how regulation has played a role in this sector, and whether it's been supportive or not?
I think that governments across our region in Latin America are seeing that financial exclusion is a problem. So no matter if you're on the right or the left of the spectrum, when you leave people out, they cannot get a credit history. They cannot access the services that Sebastian is talking about. They cannot be full members of the digital first economy. And so you are condemning them not just to cash, you're condemning them to poverty. And so they see that across the spectrum. And what we see is regulation moving in that direction. There's a fintech law in Mexico that we operate under in Mexico. We're supportive of that, as we're supportive of SPAY, the instant transfer system in Mexico, as well as CODI. We like what's happening in Brazil. I hope other countries in the region copy it. And I think there's going to be a move, as we have seen in Europe and elsewhere, toward open banking. Because as I always say, the data is not the companies, it's the people's. And in the banking space, the data is your credit history. And so if you want to be able to access a cheaper loan, I need to be able to see what your balance at ICBC is, or at Santander is. And so we think that that's the revolution that is coming, and we fully support it, and we're ready to be open with our own data. But we are still a couple of years away from that. In the meantime, I think that the regulation is supporting instant transfers and the wider availability of tech-enabled accounts. And so most of the countries that used to have a very Manichaean view of the world, either you're a bank or you're nothing, now have a more open view of the world, whereas you are a bank and you can lend deposits, you're a payment facilitator, provider, or however you want to call it, or you're nothing. And that creates more innovation with the support of the regulator, because as I always say, in order to launch one uala, I need to have 18 different custom connections. So launching Mexico, as you know, we talked about it last year, took us 18 to 20 months. And we're a company of 500 people with plenty of funding from some of the world's best investors to be able to do it. And so that's the challenge. And we need to reduce those barriers of entry, because more competition means more innovation, which means more inclusion, which means a wider pie for everyone.
Yeah, and regulation often can change with certain key catalysts. And one that's happened recently is obviously COVID. And would love to get your take on the ways that COVID has reshaped or not reshaped your strategy for the near term and then the long term. Maybe Sebastian, starting with you.
Sure. For us, COVID came to accelerate things that we were expecting to happen. There's a clear need for international merchants, which are our core, for growth. And that growth, it's just not going to come from, Didi, it's not going to grow in China. Booking, it's not going to grow in Europe. And Amazon, it's not going to find great growth in the US. That growth, it's going to come from emerging markets. And we've seen that more and more that's clear to our customers. It's also clear for us that COVID made it faster. We live on the online world. So we've seen crazy shifts from offline transactions to online transactions. Brazil has just peaked on online retail last month, more than ever. So if anything, we continue to see that these trends or these waves continue to get bigger. I think going back to your previous point, regulators do understand now that it's not a matter of fighting this, it's a matter of embracing it, making sure that they're giving the right frameworks. So if anything, COVID obviously has had losers and winners. We happen to be somehow a basket of the different industries because we power multiple of them. And there's obviously been losers, but being on the online world for us, this has been a net positive. And if anything, we're seeing some of our customers being 5 to 10 years ahead of what they expected to be at this point.
Yeah, and Pier Paolo?
Yeah, I mean, we already see it. And I was thinking as Sebastian spoke that the changes that we expected over years have happened over months this year, and sometimes over weeks. And so if you think about a product like bill payment, in Latin America, most people still go to a physical place and queue up to pay their gas bill or their water bill or their power bill. And we had 2%, 3% base usage of that feature in February. In April, we had almost 25, 30% usage. So it grew by orders of magnitude, and we didn't expect that. But that means that the digitization of that gives us the ability to create a better credit history and better savings tool for people, because I can tell, Sebastian, like, don't queue up anymore. Now with this information, I can give you a cheaper loan because I know how much you pay in gas, which tells me how big your house is, which tells me how much you're going to pay next month, and I can advance you an installment for that payment. And so that's what we're going after. And we see COVID as a catalyst for those changes that hasn't really changed the trend, but rather accelerated changes that we always expected in our societies. The digitization is a process that we don't think is going to stop. In fact, it's going to go even faster. And what we see is a demand from users across the region to not be out of the economy. And these days, being out of and condemned to cash is literally being outside of the economy. And where we need a revolution, I believe, is in merchant acquiring, because we're issuing a lot of cards. But at the end of the day, there are very, very few opportunities and players providing the business side of this. And so in Brazil, the costs are a lot lower because there's 18 merchant acquirers, whereas in Argentina, there's 3, and in Mexico, there's like 6. And so that's the coming revolution, I believe.
Yeah, and what's remarkable is that despite what feels like a fintech boom over the last several years and a lot of value creation, taking a long-term view on the market, we really are in the very early innings of digital shift in payments and financial services generally. And while COVID may have accelerated this somewhat, there's still a tremendous amount of work to be done and value to be created in enabling digital transactions in a secure and then a user-friendly way. So thank you to you both for not only joining the panel and sharing your thoughts, but also for solving a really important problem for businesses and consumers in developing markets. And thanks to your hard work, we can look forward, hopefully, to a future where we can transact in a safe and frictionless way all around the world.
Thank you so much, Dawan. Pleasure.
For having us.
Thank you.